What is going on, everybody? Long time no see. Feels like at least a week or two, and it's been a nice, relaxing time, but I did tell you I would keep you up to date on any of the happenings that come out during the interim before the holiday season and the new year, and some things did occur. So we're going to look at those today, and we're just going to count this episode, this Crypto Coffee update, as the final Crypto Coffee update for 2018, and man, what a year it's been. So thank you all for traversing this 2018 solar lap with me, and 2019 will be just as good, if not better. And of course, it will be filled with many simultaneous sips. The coffee, too, will improve, hopefully, in 2019. I'm slowly working through how to make the best French press possible. But you're not here for French press. Well, you're partially here for French press. You're mostly here for the crypto news. Okay, we got Crypto Panic open behind us, and man, what a year it's been for them. Caspers has done fantastic work on the site. Lots of updates, so definitely worth checking out. You know, if you ever have a week without Paul, you're starting to fiend for your crypto fix, you need to get your information, this is the place to go. All right, so let's go ahead and dive into more specific news articles. The Electrum wallet, the Bitcoin Electrum wallet, was attacked using some phishing malware, and they stole 200 BTC, which is about $1 million worth. So how did this work? Essentially, the wallet itself was injected with a malware that would tell you you had a security update that needed to be downloaded when you would send off a payment. So let's say I'm trying to send Bob 2 Bitcoin or whatever, it's going to say something like this: security update required. So, looks a little strange. Normally it doesn't prompt you for this sort of thing. It just lets you know, hey, there's an update available. So this one is in your face telling you it's essential. So strange. So some users would click OK. It would take you to a fake GitHub repository that would prompt you in turn to download this update, actually malware. And after you would try to send your transaction again and sign it, it would in turn hijack all of the crypto out of your wallet. So not an optimal situation, and this kind of attests to how it's relatively easy to slip into a mentality of relative complacency when dealing with this brand new cutting edge technology. We're used to seeing warning signs pop up here and there all the time, and a lot of the times we just click OK without reading the terms and conditions or really taking the time to ensure that what we're clicking is exactly what it says it is. And unfortunately in this situation, it seems that it resulted in some financial losses for some users. So this is a great reason to just kind of do your own research in terms of keeping skepticism, keeping up to date with this kind of thing. And if anything looks fishy, it's really worth the time, a lot of the time, just to be better safe than sorry. Take a step back and ensure that what you're looking at is indeed what you want to see and is, in reality what it says it is. Here's the actual tweet coming from Electrum. There's an ongoing phishing attack against Electrum users. Here's the official website. Don't download the client from any other source. So electrum.org is where you want to go if you want to use the Electrum wallet. I've used the Electrum wallet in the past. It's a fine wallet. This isn't the first time they've experienced a hack, and of course, this is not the vast majority of Electrum users. This is the minority of Electrum users that experience this phishing attempt. So we'll just keep you updated as time goes on. There are other wallet options out there, and of course, there are cold storage options, hardware wallets as they're called, like the Nano Ledger S or Trezor. They are very useful tools for keeping your Bitcoin physically secure. But aha, you may say. Paul, recently there's been news articles talking about how the ledger has practical vulnerabilities and can be hacked, and this is not the first time this has come out. There are multiple vectors of attack for really any kind of hardware or software, and this is where the rubber meets the road in terms of sussing out exactly what was said, who said it, and what vulnerability means. This was shown by wallet.fail, which was a panel specifically at a 35C3 event. They named these things wildly whenever they're hackers conferences. It's really something else. But yeah, so they got together, had this hackathon, and essentially the panel that was examining these potential hardware vulnerabilities were using 4 vectors. Supply chain attack, and this is one where essentially Nano Ledger or Trezor, any company, would have very little efficacy over ensuring, where you try to manipulate the device before it reaches the customer. Of course, in the warehouse where these things are being built, the companies have full control over those kind of processes. But once you ship out a wallet to FedEx, let's say it ships to a user, if, for instance, this package is intercepted and tampered with, that really has no bearing on well, it has a bearing on the company, but the company doesn't have the efficacy to stop that happening directly. One of these issues in the past few months actually, a user received his wallet and it was looked to be resealed in some cellophane wrappers, and the seed phrase was already written down on his behalf. If this is the case, if you have any kind of suspicion with any hardware wallet you're handling, just do the right thing. Better safe than sorry. Remember, take it slow, better safe than sorry, because this is the kind of thing that isn't easily recoverable. And turns out, unfortunately, this user's wallet was indeed compromised. The seed words that were written down were fake seed words, and another user was able to use the original seed words once the recipient of the wallet deposited some crypto to in turn take said crypto. So next one we have is the firmware vulnerability, which is just like hacking the actual wallet. Side channel attack, which is another type of man-in-the-middle attack, a bit more technically complicated. And chip level vulnerability, which is actually messing with the chip itself to override some of the processes that the hardware would tell the software to carry out. So another issue with this is the fact that there was a lack of responsible disclosure. This is something that we've seen in both Bitcoin and Bitcoin Cash. Just for example, there were some serious issues in Bitcoin Cash, and a Bitcoin Core developer responsibly disclosed this bug, and it was patched before any major damage could be done whatsoever. And the obverse happened as well, in which there was a pretty big bug in Bitcoin, and a Bitcoin Cash developer in turn identified that bug, and responsible disclosure won the day. This is not an issue of tribal crypto wars. This is really how technology is supposed to function in its purest form, in that everyone's trying to build the best thing they possibly can, and using vulnerabilities to destroy other people's work isn't really that great. So with that said, it seems as though this is largely more of a hype piece than not, but with that said, I appreciate it for what it is, because it's definitely drawing attention to some of the potential security vulnerabilities in this hardware. Now, we've already seen some of the issues that can arise with software, but hardware is something that perhaps we fall back on with a little more little less leniency. We're very, I guess, susceptible to say this kind of stuff is, well, it's hardware, how tampered with could it possibly be? So with that said, just like the story I just relayed to you, always make sure that what you're receiving is from the actual manufacturer, it hasn't been tampered with, and that you keep this hardware in a secure location, somewhere like a fireproof safe, or even in a bank security lockbox. Maybe not the best idea considering the crypto sentiment against banks and whatnot, and some of the potential legal issues depending on your jurisdiction and country, but with that said, here in the US, it seems to be a relatively safe option. Now, speaking of the US and laws, US Federal Reserve does not like the idea of a government cryptocurrency. Now, when I saw the title of this article, I immediately thought, what do you mean government cryptocurrency? Since there are two major types. You have the retail, which is people like you and me using the government crypto, buying my Starbucks latte with Federal Reserve coin, and then you have commercial. Wholesale versus commercial. Commercial is just the back-end deal, essentially, kind of how banks receive money from the Federal Reserve and vice versa. They make sure that their liquidity pools are filled up and situated to settle any payments with ease and flexibility. That is the commercial application for a wholesale, or the commercial application for a digital currency, not a wholesale. So the central bank digital currency that they're talking about here seems to be a bit more opaque, since the speech that is referenced indeed references the volatility of crypto assets and the volatility of Bitcoin itself. So I can only imagine that the individual speaking about this, one of the Federal Reserve Board governors, when he's saying this, he's talking about more of a wholesale cryptocurrency, something that would go to the general populace, not just the retail back end of the central bank Federal Reserve here in the United States. And this is something that was discussed here in an IBM report. I love this report. I read it 1.5 times, basically, kind of did a skim read the second time just to make sure I absorbed it all. IBM did a fantastic job, partnered with OMFIF to do an overview of how central banks view essentially not wholesale, but retail digital currencies and how they're going to implement them onto their back-end architecture. Really in-depth study, really interesting. So this makes me think perhaps this is a fake out, maybe, by the Federal Reserve, just to get everybody off of their back. After all, when everything is quiet, that is generally when individuals are able to do their most objective, deep dive research and get an idea as to what's going on. When you have all the hype and excitement surrounding these kind of subjects, it's very difficult to ascertain what is true, what is hype, and what may best apply for a specific situation, especially one as important and critical to global finance as the central bank for the largest economy by far on Earth. So definitely something that makes sense, and perhaps that's what they're doing. Let me know what you think below in the comments. Is this a fake out by the Fed? Seems to be something they do occasionally, or could this be a misunderstanding between wholesale and retail central bank digital currencies? Either way, Japan's second largest bank is launching their own cryptocurrency in March, so This seems to be more of a retail application. It is a stable coin. So this is, again, retail application, or excuse me, wholesale application, something that individuals on the ground can utilize. And with that said, wholesale also includes retail. So the bank's back end is going to assumingly be using this with other banks to ensure that this is what a stable asset looks like. They can use this essentially for interbank trade and payment settlement, and it looks as though individuals on the ground as well can use this. So this will be a really interesting use case, and perhaps even a template that the Central Bank of Japan can in turn use to implement for their own back-end retail use and then eventually wholesale to the population. So really interesting stuff. Goes to show that things are shaping up excitedly for 2019 indeed. With that said, last one, major Bitcoin exchanges are accused of faking volume. Who's trustworthy? That is the biggest question here. And the fact that we're talking about ramping up into 2019 with a vengeance, going to have some fantastic market action, whether it's up or down, development is happening all around. But what if it's all fake? That's the big question, right? I mean, you see cryptocurrency exchanges with 2 billion, $100 million worth of volume, and now you're seeing studies and analyses come out saying that, well, maybe they only have $100,000, $12,000 worth of daily volume. I don't believe any legitimate self-respecting institution would delve headlong into such an ecosystem. And I think that's why you're seeing these proprietary solutions being built out now. After all, Fidelity's been working in cryptocurrency since 2014, so it's been a while. Probably longer than, maybe longer than most people who are watching this video, just if you go by the bell curve and statistics. So with that said, they know what's going on. And the fact that these are large institutions that are very well acquainted with finance, they know what's going on. I don't truly believe that they're not watching this kind of information, that perhaps most of the volume in the crypto space is indeed fake, and perhaps that could be the biggest component that allows this system to be taken over by the existing bank and corporate interests. The fact that most of this volume is fake, and that it's largely just a run for the money, rather than an ideologically driven, decentralized platform. And that's neither good nor bad. It's just natural. That's kind of how the lay of the land is. You need ideologues to be the visionaries to build out the initial push, and then you need the more conservative, traditional, existing infrastructure to help the bankroll and basically navigate how this kind of thing is then adapted by the wider populace. But suffice to say, this is a huge, huge component of the ecosystem. And this is something that you will see us focusing on more and more throughout 2019, because it is critical. Accuracy and truth in information is the core of this space. And after all, sometimes when you're doing your own research, there's a lot of information. And sometimes doing your own research just yields more and more and more information that's really difficult to suss out. And after all, that's why Cryptide is an entity. That's why we started Cryptide to begin with, and why we do what we do to help you do your own research and to help you get a better handle on what information may be applicable and what information may be inapplicable, or at worst, unscrupulous. So with that said, I thank you so much, seriously, for making this an awesome year, for supporting Cryptide. It's been fantastic. And like I said, we'll be focusing on this kind of information a lot more in the future. $222 million reported volume with an actual volume of 2.7 million. That's only 1%. That's crazy. Jeez, wild stuff. But with that said, we'll be able to suss this and more out in the future in 2019, next year. I hope you all have a safe, enjoyable New Year's celebration, whatever you may be doing, wherever you are in the world. From Cryptide, from your buddy Paul, to you, thanks again. We are Cryptide. Happy New Year. And remember, the tide is rising.